Hey everybody, Mark Rickert here with Rickert Property Group at Keller Williams Realty. Hope you are doing well. It's a beautiful, beautiful morning, afternoon, evening, wherever you are. Hope all's well. Thanks for joining in. Today I wanted to talk a little bit about multifamily property and how do you analyze a good multifamily property. In other words, does this make sense to buy or not? So I thought a little education might be helpful because there are some myths out there. I am a proponent of the more doors you can buy, the better for you. That's economies of scale and in the same place. So I've had colleagues and friends of mine that have purchased many single family homes in different areas, in different states. And they kind of, after a period of time, when they start getting a little bit more savvy as an investor, they tend to regret that. And so then they have a bunch of homes that they have to get rid of. So let's talk about the difference between homes and a single family home, multifamily property in the true sense, which is a commercial property. And then kind of in between would be, let's say, a duplex, triplex, fourplex. Make sense? All right, so what we're going to do here is let me just explain a little bit about the single family home model. The single family home model is, you've got a few different areas in that. You've got people that wholesale homes out. So they're the signs you see on the road. We buy houses for cash, sell your house fast for cash, call this number. Those are wholesalers. And what they do is they look for folks to call them, and they meet with these folks, and then they tie up the property and they give people a quick contract on their home. Sometimes people are looking to get out of their properties because they might be having financial problems, they may be having health problems, it might be the family members of a deceased relative, all kinds of different scenarios of why people want to get rid of their property, and sometimes for a little bit, pennies on the dollar, as opposed to a retail sale. So that's the wholesaler. They meet with the folks, they write up a contract, they say, I want to get control of your property, and then they resell that contract to a flipper, someone that will purchase the property and put some rehab money into it and then sell it for a profit. So those are you got wholesalers, flippers, and then you've got just standard retail people, folks that sell their homes for kind of on the retail market. And they work with people like me who are licensed real estate professionals. So those are just a little bit about the single family homes. Many of you already know about that, but I just wanted to, for those that didn't, I wanted to talk a little bit about that sector. Then we move on to duplexes, triplexes, quads, or fourplexes. And those are kind of in between the single family home and a straight out commercial property or multifamily property. And I'll explain why that is. So when you're purchasing a duplex, triplex, or a fourplex, typically the way that those properties are valued, things are changing a little bit, but they're still mainly valued by an appraiser based on the market of what has sold, what like properties have sold in the area for a given price. For example, I just sold a fourplex in an area that fourplex was about $250,000, or roughly $65,000 a door, if my math is right. All you math whizzes, don't flame me if I got it wrong. I'm not a math whiz. So let's call it 250 divided by 4. That should be 65,000. So that's 65,000 a door, right? So the way that that property is valued would be by an appraiser, or by market comps, would be you're looking at like properties. In other words, same number of bedrooms for each unit, same number of bathrooms, and similar size. I should say similar, not same. Similar kitchens and whatnot. types of roofs and things like that. So when a market analysis is done, typically we like to go out about a quarter mile in a radius, do a market analysis, and bring back results, if there are any, of properties that are of like kind in that area. And we go back 6 months when we're doing a market analysis. If there's nothing available, we'll go out an additional half mile. So we start a quarter mile, go out another quarter mile, a half mile, and keep expanding the circle. And sometimes we have to go back a year to find what the sales in that area have been for the past year. So that's kind of how we determine the value of a duplex, a triplex, and a fourplex, which is different than a commercial property. And I'm kind of just giving highlights right now. We're not diving deep into all that. So I'm sure you'll have some questions. If you do have any questions on this, feel free to get in touch with me at mark@rickertpg.com, mark@rickertpg.com, and I will do my best to answer your questions. Each market is different, of course, but there's some concepts that stay the same. So we've talked about single-family home investing, duplex, triplex, quads, and then commercial properties. Okay, so and I'll get into the commercial in a second. What I was going to say is that when you're investing in real estate, you always want to have the end game in mind. So for an example, some people say, well, I want to own 100 homes in the next 10 years. So great, that's a good goal. But when you think about 100 different homes in 100 different places with 100 different toilets and 100 different refrigerators and 100 different front doors and 100 different kind of roof types, possibly not they won't be different, but they might vary. You know, might have a flat roof, might have a pitched roof, shingle, ceramic tile, all kinds of differences. It's difficult to scale that kind of a business, and because you can't purchase the same types of, let's say you have a duplex or a quad in the same building, you're going to get the same refrigerators, right? You're going to get the same kind of roofs, a roof type on each of the buildings that you own. So it becomes also distance. You know, if you're driving all over the place to manage your properties, that's not efficient. So this is why the multifamily property sector is very appealing to a lot of people, especially once they get to learn more about it. At first, it's a little frightening, like, oh my gosh, I don't know if I can deal with all those tenants, but most of the problems don't come true that most people fear, okay? So the exit strategy is, how am I going to sell my properties in, let's say, 20 years? I'm going to have 100 homes in different areas. Excuse me. How is that going to look to an investor? Could I sell it as a portfolio? Can I package it up? The answer is not really with single-family homes. It's more probable with, you know, duplexes, triplexes, and quads. But once I talk about the power of commercial, then you'll see, well, even that sector is not even as good as a commercial multifamily property in terms of cash flows and things like this. Okay, I'll explain. So, though they're very similar. So let's move to the a fourplex. Let's say you have a fourplex that you want to buy, and you want the rents are $650 per unit per month. So if I take my little handy dandy calculator, because we know I'm not good in math. Oh, by the way, the 250 divided by 4. Let me do this here. So 250,000 divided by 4 is 62,500. I told you I was screwy in math. Okay, so anyway, it wasn't 65,000. It's 62,500. A $250,000 property divided by 4. 62,500. All right. So if we take that same $650 times 4 units, that's 2,600 gross income per month, right? So that's basically what the gross income, and I'll go through that in a minute. I just wanted to explain a little bit about the valuation differences between a market analysis and a cash flow analysis, okay? So when an appraiser goes for a duplex, triplex, quad, they will use multiple approaches when they're valuing the property. Income approach and market approach as well, meaning what's been selling in the market. And that's not always as let's call it beneficial to the owner of the property when a market analysis is done, because markets go up and they go down. So if we can control more the outcome of the value of the property over the, let's say, 20 years, something we're in control of, then we can extrapolate that in 20 years, this building will be worth X. I bought it for X, it's worth Y. And so you can't necessarily always do that with a duplex, triplex, and quad. Okay, so that's just a brief outline on what I'm talking about relating to valuations of the in-between single-family home, the duplex, triplex, quad, and now I'll talk a little bit about the 5 units and up. So quickly, 5 units and up, which is really what I educate people on doing more than single-family homes, and also even duplexes, triplexes, quads. Even though those aren't bad, they're just not as, what do we call it? You can't bank on what they're going to be worth as much, as I mentioned a minute ago, as you can with a full commercial multifamily property. Allow me to explain. So when you have 5 doors and up, you are now into the commercial realm of real estate, where doors, I mean apartments. Let's call them apartments. So you have a 5-unit building. Those are 5 apartments. Each of those apartments has a certain cash flow associated with each apartment based on the rents. And of course, then there are underlying expenses that are taken away from your overall. And what is nice about commercial properties is that because you can predict what the rent increases will be over the course of, let's say, 10, 20 years, if you're going to hold the property that long, and you can also extrapolate how much the expenses will go up due to inflation and rising costs, but you can also factor in what are my expense decreases going to be. In other words, if I have, an expensive lawn care service, cutting the grass at my apartment complex, and I can cut that expense, let's say, by a third, you've just improved the value of that building. Also, if you increase the rents over a period of time, you've just increased the value of that property by a factor times the number of properties that you have. So that is just a thumbnail sketch of how to approach and analyze single-family home investing, duplex, triplex, quads, and then multifamily properties. So what I'm going to do is, in future video, I'm going to go through in detail this sheet here. It's my multifamily property analyzer, and we're going to go through the number of units. We're going to go through what the asking price is, the purchase price, how much earnest money has to be put down, what the term of the note will be. Can we get owner financing? Or are we actually going to have to go to a commercial lender for 5 units and up? Or when it's 4 units and below, we go to a conventional lender for that property. For an example, if you buy a fourplex, you would be working with most of the conventional lenders out there. And let's say if you're a veteran and you want to buy a fourplex and live in one of the units, you can do that, and they will fund a loan if all their parameters are met, so that you can live in one of the units and rent out the other 3. Pretty slick. So then you can do that again, and that's some of the ways that some veterans and active duty military folks actually build wealth, is through this method. So they can't buy 5 units and up and get it funded with the with a VA lender. They have to buy 4 and below. But once they get enough working capital, and once their net worth is at a certain point, then they can move into a commercial arena. So I hope this has been helpful to you today. I am not going to dive into all of these things today. I'll do it on a future video. If you have any questions whatsoever, please feel free to reach out to me at my office number. I'm at 505-600-3956. That's 505-600-3956. And also, I have a toll-free number, which is 888-386-6541. That's 888-386-6541. Or you can reach me at my email, Mark, M-A-R-K, at rickartpg.com. And I'll be happy to answer any questions you have. Keep an eye out for future videos. And until then, you guys have a fantastic day. Happy investing, and take it easy. Bye.